Hello traders and welcome to another video review. Today is Tuesday, March 19th, 2024. Let's find out what's going on the economic calendar today. Reserve Bank of Australia interest rate decision were exactly as expected. The RBA decided to hold the interest rate at the level of 4.35%. Bank of Japan interest rate decision was in line with the expectations. The Bank of Japan hiked the interest rate of 0.1% from minus 0.1% to 0%. Monetary policy statement and industrial production data were, of course, released overnight, and now there is a Bank of Japan press conference taking place. At 9:30 we got the ECB, the Guinness, to give a speech, and then we got some data from the Germany. We got the economic sentiment data, and then we got the economic sentiment data from Eurozone, and wages in the Eurozone will be published as well. During the New York session, we got the building permits and housing starts data at 1:30. Then we got the core CPI data and CPI data from Canada at 1:30. Global daily price index are scheduled for this at 4 o'clock. And then we got just minor data scheduled for release. Atlanta Fed GDP now at 5:30, then 6 o'clock 20-year bond action. Then we got the Westpac consumer sentiment from New Zealand. At 9:30 there is the API weekly crude oil stock data and current account from New Zealand at 11:15. So the most important data releases were already done. They took place overnight. Nevertheless, let's take a look at the US dollar to the Japanese yen technical chart, because we've been talking about the Australian dollar yesterday. So the 4-hour chart of the US dollar versus the Japanese yen is showing us very nice bullish rebound. The recent high was made at the level of 150.49, so the market is approaching the technical resistance and the yearly high at 150.89. So this is our technical resistance. We broke back inside this rather narrow zone here. So that was, as you can see, the technical resistance. Now it will be the support, 149.22. There was a kind of a consolidation here, and then we got the breakout. The market conditions are extremely overbought whatsoever, so we might see some sort of the profit taking soon. But with that kind of momentum, there is a possibility of hitting the 150.89 as the result of the increased bullish activity before the some sort of the pullback will take place. Eventually, of course. Yeah, we are trading above the 150 periods moving averages as well. So as soon as the 150.89 technical resistance level is hit, the bulls will have the chance to break above it and then, of course, move even higher. So that's the US dollar to the Japanese yen. Let's take a look at the euro dollar. Why? Because euro dollar is out of the channel. It's out of the channel, below 50, below 100 periods moving average, pointing to the downside with the negative momentum on a 4-hour chart. Next stop is the demand zone, located here between 1.0798, 1.0808, I guess. That's the correct level. So it looks like we are going to see some more downside action on the US dollar to the on the euro dollar. We got the intraday technical resistance located at 1.0874. So we need a breakout above this level in order to resume, let's say, the up move. But it doesn't actually looks good for the bulls just yet. It looks like the market is under bearish control, and they want this price to go even lower, especially that we are already out of the channel. Please remember, that was the wave A, that was the wave B, that was the wave C. Possibly the correction is done. Now we are reversing lower, so please keep an eye on the demand zone. Today we still have some very important data scheduled for release later on that might affect the euro dollar. What else should we take a look at? Maybe British pound, one of the major, and the reason for that is, of course, that we got some sort of the downside movement extending towards 1.2707 and maybe even towards 1.2692, where is the next technical support for this market. So this market is moving lower. This market is right now under the bearish control. So the supply zone that we have on our chart just basically worked as expected. That was the wave A, that was the wave B, that was the wave C. ABC correction to the upside. Now we reverse lower, but this reversal, if we take a look closely, is right now in 3 waves as well, because from the top of 1.2893 we got the wave A, then we have a slight correction wave B, and now we are completing wave C again. So it doesn't actually look that this market is developing any sort of the impulsive wave. However, the alternate count would be alternate wave 1, correction alternate wave 2. Maybe this would be the wave 3, but that means we need to break way below the level of 1.2599 to extend, of course, the drop in the wave potentially 3, and we cannot go back above the wave A low, which is 1.2746. Otherwise, this one again looks like the ABC correction to the downside, according to my Elliott wave count. And now, last but not least, we should talk about the Bitcoin, because everyone talks about the Bitcoin. Remember yesterday analysis when we noticed that the Bitcoin went towards the level of 50% Fibonacci retracement. It almost hit this level and then reversed. The local high was made roughly around here. So that was just a few hundred from the 50 periods moving 50% Fibonacci retracement. We broke above this trend line and we tried to move higher. I'm talking about the bulls, of course, but it didn't work very well. So now this line is out. These arrows are not really necessary. I'm going to mark only the recent high. We are apparently can mark it again as the horizontal line, because this is now fully blown technical resistance. As you can see, we are testing the lows from the March 17, and the overall downside is already minus 12%. If we break below the lows of 64,518, then the next target for the bears is located here. This is the crash of the March 5th 2024, located at 59,172. As you can see, the market is totally dominated in the short term by the bears, as they're pushing the market lower and lower. The bulls don't even get the chance to break above the level of 50, which is the neutral level on the 4-hour charts that separates the negative sentiment, negative momentum, from the positive sentiment, positive momentum. So it looks like we will see another downside movement on the on the Bitcoin very soon. Another extension to the downside should be on everyone's chat. Please notice the behavior of the market when we go even lower, a little bit lower, towards the 64,518 level. Any breakout, vicious breakout to the downside, and then we stop below $60,000, because there is nothing here virtually that could save the bulls from falling even lower. And that would be, if we hit this level, eventually that would be let's say something like a 20% of the correction, if I'm not wrong. Okay, so let me just move this, and that would be, yes, 20%, yes, exactly, minus 1980. So 20% correction almost is looming for the Bitcoin if this support is broken. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.